Welcome back. It's been a record-breaking couple months for nat gas. The prices are down almost 80% since September. They went below $2 a contract on Wednesday. Brian Sullivan is here with more. Now, we're saying it's mostly good news. What's the asterisk?
Yeah, I mean, I think so. It's good news for Europe. Get to that in a second. Hi, everybody. Yeah, natural gas above 2 now, was below 2. We were at 9 last fall. You think about it. I mean, what's going on? All right, number one, supply-demand, right? Eco 101, it is too much gas. The weather, by the way, it's what, 65 degrees here right now? It's 84 degrees in Richmond, Virginia, breaking the previous record by, I think, 9 degrees, according to AccuWeather. Warmest February ever in New York City. I'm not a meteorologist, nor do I play one on TV, but it goes to gas demand. No one's heating their home except, like, Minneapolis.
So everyone's furious because they're like, why am I paying $800? And I've talked about California. We hear it in parts of New York. It's sort of perverse that at the very moment the futures or spot prices plunging, these utility bills are way up. What's going to happen? Normally, I mean, they have to ask for rate hikes. This was all happening over the summer. Will they come down very quickly now or not? Are regulators going to kind of wink, wink, nod, leave them up?
Yeah, because utilities are really good at lowering prices all the time, right? I mean, they just want to get right on that.
California's doing a rebate, $50.
Okay,
but
yay,
it doesn't go that
$50 rebate, right? Half a tank of gas. Okay, so why is your electric or heating bill up if you're on gas and gas is down? Number one, there's a lag. Okay, number two, the price we show on TV, it's a paper contract. In Massachusetts, they have what's called Citygate. It's sort of the delivery price, what they use. It was at 18 last year. It's now down. So prices should come down, but you're paying what they bought it for 6 months ago. So your heating bill's going up as we're saying, whoa, natural gas is going down.
Exactly. So probably the most important question for our audience, many of whom might have gotten really into energy last year, watching oil go up, watching nat gas, watching, hearing about the energy crisis.
I heard about that.
Yeah, I heard about that too. Glad it didn't happen. The energy crisis, that is. The stocks have actually held up relatively well. I mean, if you look at a lot of the leading nat gas producers, let's call them, not a disaster. They're certainly not down 80%. What explains that?
Well, because they're still going to make money. I mean, right? I mean, now the stocks, we'll see if they hold up.
Right.
I mean, a lot of nat gas bulls will tell you prices are on a dip because there's too much. We oversupplied. Freeport LNG was offline. We had all this inventory. They're going to have to start shutting in maybe wells, right? If you're a nat gas bull, you're like, okay, Freeport's back online. That's the second biggest exporter. Maybe supply cutbacks coming. And, oh, by the way, the weather could change.
Right.
Again, not a meteorologist.
Everyone's like everything's fine. Going well, right? But then if it flips and all of a sudden we don't have all of this.
What if this hot winter turns into a super hot summer and now we're just cranking the air conditioning in New Jersey, New York, even places like Denver? So, right, you never know what could happen with the weather.
And I always pay attention to Brian Reynolds. We've had him on the show, eponymous research firm. He's not an energy specialist, but he has many times called these commodity moves correctly because he understands sort of the structural underpinning of the markets. And he's saying the futures curve indicates nat gas prices won't go above $5 until at least 2035.
Wow.
What if we?
Listen, Brian, if you could make a prediction 12 years out, right. Who's going to win 2028's Kentucky Derby?
He's saying the market is so oversupplied that it almost looks like, he and others have said, we've gone from shortages to gluts. Now this glut
oversupplied based on a lower demand curve. According to AccuWeather, 25% fewer heating days in America this year, particularly in the Northeast. Europe, Rome, 65% decline in heating days. So thank God. Europe is literally being saved by the weather. People are coming at me saying, oh, you're reporting all these worst case scenarios. We didn't know what was going to happen with the weather.
And it's good.
What if it was super cold for months? They'd be in deep doo-doo, I think is the term.
The scramble to raise inventories to forestall this was the most important thing.
And by the way, they're paying for it. I want to be very clear on one point. Yes, Europe's got great energy storage, nat gas. That's good news. Yay. However, they're still paying $15 equivalent. We're paying $2. They're borrowing money to subsidize industries and households. Don't be surprised if this energy problem, crisis, whatever, becomes a debt issue. I'll give you a random but interesting. I'll give you a number. $98 trillion in emerging markets debt, highest ever, 250% of GDP. Why do I bring that up? Because they're having to pay up for energy as well, because Europe is taking the energy they would have bought.
Great point.
There could be sovereign debt issues a year from now because of what's happening now.
It's a good thing the show's coming. What date?
Thank you, by the way. Yes, we have a new show. Last Call is the name. Wednesday, March 8th.
Wednesday, March 8th.
7 p.m. Eastern, 4 p.m. Pacific, 5:30 in Denver. I don't know what they're on Mountain Time, whatever that is.
I don't think it's a half hour.
Tune in. It's going to be a totally different thing. The show looks great. The anchor, I hope, holds up.
I hear he's fabulous.
He's loud.
Brian, thank you.